Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Largely positive start, courtesy the handover that we have received from Wall Street. The Taiwanese index is up 1%.
All I have to do is impose a tariff. The more, the faster they move in.
I think we're very close, if not in a recession now.
Nifty last Friday broke above the previous high of 22,697 and 22,806, 460 points, 450 points on the Nifty.
I think we ended the price correction last Monday at levels of 21,800.
We are seeing 50 to 100 basis point downside on our global GDP growth forecast.
Gold loan is a very operationally intensive business.
China's credit that they've leapfrogged, taken the opportunity and become really the most dominant manufacturing as well as technology power in the world.
The Nifty is now above 23,300. The Sensex is advanced nearly 1,500 points.
Food inflation, though, 4.66 compared to 5.94% in the previous month.
From an investment decision, whether you're an Indian company or an MNC, looking at Indian manufacturing and Indian supply chain, you can get excited about making that long-term investment.
1,500 points in the Nifty and portfolios feeling superb because the breadth of the market is in favor of the bulls. Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Manglam. Well, the markets are actually looking good today. And if someone had to say that getting into the last 60 minutes, you'll be up close to around 500 points, well, you would have taken it. And as we speak, the markets are now up close to around 500 points, the breadth of the market. That's the big positive today. And the big heavyweight names, whether you look at HDFC Bank, whether you look at IndusInd Bank, Shriram Finance, all of them holding in good stead in today's trading session. That's the screen you like to see. Breadth of the market good. Nifty Bank is well good. And importantly, the Nifty Bank has taken off the recent high. The recent high was around that 52,000 odd mark, which now it's trading above. And the Nifty as well was facing some resistance at around the 23,100 odd mark. Well, it's trading above that mark. Hey, Manglam.
Hi, Nigel. You know, this afternoon, if you look at the nature of the stocks as well, they're not just restricted to one sector, even though the banks are outperforming. Among the top Nifty gainers, just look at it right now. We have, Hero MotoCorp that should come up for you individually on the screen right now. The intraday chart tells you that a big up move has taken place just in the last 10-20 minutes or so. That's Hero MotoCorp, top Nifty gainer. We have Bajaj Auto, which has been doing well all through the day, but currently at the higher end of today's trading range. Titan, Apollo Hospitals, Wipro and IndusInd Bank. So top 6 Nifty gainers, 5 different sectors. Similar is the case for the broader markets as well. We are seeing a big traction on names like Samman Capital, the erstwhile, from the Indiabulls group itself. So this is up around 7%. RBL Bank is the other one, which is up 4%. Then you have IRB Infra and Tata Communications, along with Nykaa. Nykaa too has found its feet among all the other consumer companies that have reported their fourth quarter update so far. Nykaa has been fairly strong with mid-20s sort of growth coming in, led by their beauty business. That stock continues to see traction. But you spoke about the resistance that we've seen, a little over 23,000. Today that was taken out because, a large part of the street was hoping that maybe the market sees resistance at 23,000, which is why we saw a lot of call writing at the 23,000 mark itself. Look at what's happening now. All those call writers caught on the wrong side. They have been running across to, cover their position. So that's the 23,000 call. This morning, the market opened higher, continued to stay higher. And what's powering it ahead is an element of short covering, not only in the futures space. We'll get the data today in the evening. But as of now, we're seeing that. But at the other level, 23,300 put writers are also fairly active for a premium of 90 rupees, telling you that now that the market's moved higher, the base also has moved higher to 23,200 itself. So we'll keep an eye out on that. The broader markets, you spoke about the market breadth. It looks like a train track. Right from the morning, we've had the green line above the red line, and that continues without any sort of volatility, the mid-cap index at the high end.
Well, that's right, Manglam. And the two new entrants, I don't know whether it wants to change things around because Eternal, right? That's the new name.
Yes, Eternal.
Eternal is up close to around 2% or thereabouts. So normally we've seen in past instances when a company comes into the Nifty, sometimes it loses its fizz. But that one's up 2%. And Geo Financial, Well, that's looking very, very good as we speak. Sharp up move is what we are seeing. It's taken off some crucial technical resistance levels as well. So that's pulled back a goodish bit after correcting from around 360, 370 odd mark. It went down to around 210, and from there it's seeing some bit of a bounce. How do you position yourself in the final hour of trade? Mitesh Thakkar joins us on the show. Hi, Mitesh. Good morning. Good afternoon. I remember this morning, that you told us that you'll be looking to buy into any kind of dip. You'll be looking to maintain your long bias. That's worked out well. And as we speak, actually, the Nifty is higher than those levels that we saw even on the day these Trump tariffs were announced. And India is one of the few markets that actually have been outperforming. Are we good for more? Where are we headed?
Yeah. Good afternoon. So I think, given the fact that there's been hardly any decline post the open, we are slightly off the day's high, but only about 50 odd points, and we recovered well. The early buy and profit booking which happened was immediately bought into. My sense is that I think we should eventually head towards 23,600, and then in a good case scenario about 23,750, 800 zone. So stay positive and use declines to buy into. On the stock side, I have a buy call on Policy Bazaar with a stop at about 1585 for targets of around 1660 and maybe more. And the other one which I like a lot is Poonawalla Finance. It's been showing good strength and today is a good continuation on the upside. So buy here with a stop at about 369 for targets of 395.
All right, we take that point. So Poonawalla Finance is one of them that you like. You're keeping your long bias intact. A bunch of stocks which are doing a lot better right now. This afternoon, we have GMR Power opened well after the announcement of them selling some of their power assets to strengthen their own balance sheet. That continues to do well. A lot of these chemical stocks which are actually taking a bit of a knock on account of uncertainty regarding the tariffs have come back. So we have, Bodal Chemicals, which is up 10%, Paradeep Phosphates, another 8% higher. And because of the uncertainty of tariffs, we had a big drubbing in a lot of these auto stocks. Now, there is hope that maybe there could be some sort of relief coming in for these auto stocks, and that explains why all of them are buzzing higher, especially the ones which are higher, global exposure as well, the likes of Tata Motors, which is doing well, and then you have Samvardhana Motherson, Sona, BLW, all of them which supply to companies that supply to global auto companies as well. They're doing well. Donald Trump says that he's considering a modification to the 25% tariff on auto imports. Sudarshan has been telling us that this is a positive development. He joins us to get us to get us up to speed with what's taking place now. Sudarshan.
So while there is an all-round gain in the market, but one sector that is amongst the outperformers is the auto sector. Most of the stocks are higher, especially the stocks like Samvardhana Motherson, Sona, BLW, Tata Motors, all these like global exposed stocks which have the exposure in the countries like US, UK or European countries. Now, what's the reason behind this? Because Donald Trump has been making statements related to tariff. Now, in the latest statement that he has said about the auto, that he is considering modifying the tariff announcement that was done of 25% tariffs on foreign-made auto companies, basically for autos and auto parts, and that had come into effect on April 3. Now, why this is positive for companies like Samvardhana Motherson, Sona, BLW? Because Mexico forms nearly 4% to Samvardhana Motherson's revenue, and for Sona, BLW, Mexico contributes nearly, basically it's in the range of 2 to 3%. Now, if you look at the Mexico-produced vehicles in the US, so for General Motors and Toyota, the contribution is in the range of 30 to 40%, while for Volkswagen, the contribution increases to almost 60%. And Samvardhana Motherson is one of the biggest suppliers to these companies, and that is also one of the reasons that this Samvardhana Motherson is higher, and it's followed by Sona, BLW as well. But why all the other auto names are gaining? Now, as you have mentioned in your link, that there is a hope that it's not limited to the imports from Mexico and Canada, it's also extended to countries like Europe and UK, and that would be a huge positive for someone like Tata Motors.
Got it. Okay, all right. Thanks a lot for that, Sudarshan. So good relief is what we're seeing out here. Mitesh, Tata Motors, the stock fell one way from around that 1100 odd mark to around that 600 odd mark. But today it's seeing a bit of a bounce. Any levels you're looking at on Tata Motors? I recall during COVID, well, it went down to around 60 rupees. So a lot of investors that got in there, well, they are still way in the money. But from the peak, it's come off. So how is it looking on the charts?
So Tata Motors, if you look at it with that positive news flow, I think has bounced back from lower levels. But looking at the big decline, I think you will see a lot of supply emerge at higher levels. So I think anything close to about 645, 650 would be an area to exit. I think we might go till there. But in the near term, I think, and even for a fortnight or so, I think that will be a very difficult level for the markets to cross.
Right. Mitesh, a surprising mover today has been Dabur. Just pull up the intraday of Dabur that tells you, it's been a big mover up around 2.5%, outperforming the other FMCG pack as well. But earlier it was underperforming. The fourth quarter update was fairly weak. The stock saw a big sell-off after that. Do you think from a price standpoint on the charts, the worst is behind Dabur, or maybe there are lower levels that one can look at as well?
See, for Dabur, my sense is that Marico is something which has done extremely well and has made a new high, while Dabur is struggling. While there is a reversal on the hourly and 2-hourly charts from lower levels, again, I think the earlier supply pivot was around 485. I would be surprised if it manages to get past 485 and show more strength. But instead, between the two, I think I'll choose one, Marico, or even a Britannia, which was a call a few days earlier. So I think both these stocks slowly, if they are accumulated, I think in the next few weeks they'll make much higher highs.
All right, that's about Britannia and Dabur. Mitesh prefers Britannia and Marico to Dabur itself, which currently is outperforming. 485 is the big resistance there. But the stock that has been, on a big up move in today's trading session all through the day and currently at the high point of trades, GMR Power looks to divest stake in its stressed assets, strengthen its balance sheet. Vivek joins in with all the details and more. Vivek.
Well, that's right. So GMR Power and Infra, one stock from the GMR group that we don't discuss too often, most of the attention is towards GMR Airports. But remember, this particular company, the thermal power producer, also has a few gas power plants, and along with that also is quite active as far as the smart meter segment is concerned. An important development, remember at the end of the March quarter, the company did say that they had reached an agreement as far as lenders are concerned regarding a significant debt outstanding that the company had, and they had reached a one-time settlement. In further to that particular development, that the company has informed the exchanges that they are now going ahead and divesting stake in 3 non-operating and 3 stressed assets to a private equity firm called as Synergy Investments Holding. The total consideration that the company will receive for all of these stake transfers is a little over 650 crores. Let's have a look at each stake divestment that the company is doing. The first one is GMR Bijli Holi hydropower project. It's a 180 megawatt hydroelectric power project. The company will transfer close to 80% equity stake in 2 tranches to Synergy. And along with that, the next company or the next JV that the company is actually looking to divest it is GMR Vemagiri Power Generation. The company owns almost 388 megawatt natural gas power plant, of which the company will transfer its 51% stake to Synergy. And lastly, GMR Rajahmundry Energy is the one where the company will divest close to 51% stake, and it operates a pretty large 768 megawatt natural gas combined cycle power plant. Now remember, out of all of these 3 assets, in fact, GMR Bijli Holi hydropower was one of the assets that the company was intent on turning around. In fact, Q3 and Q4, there was a significant turnaround. What is the company saying? What is the rationale for this particular stake development? It's a non-core asset. Remember, the natural gas plants that the company was actually operating were not operating at peak capacity, given the fact that the input price of natural gas was pretty significant. So the company continued to make operational losses over there. Along with that, the company says that the transaction will help the company to meet the proposed one-time settlement to the lenders. They say that it will de-lever the balance sheet by 4,400 crores, and the move will help the company spin off non-operational gas plants as well as stressed assets of the GMR group. Synergy is a private equity firm, so overall a positive development. No wonder you're seeing the stock surge in today's trading session. Thanks a lot for that, Vivek. Well, let's get you some market opinion as well. Earlier today, we spoke to the founder of Goldilocks Global Research, Gautam Shah, on how the markets are expected to move and what are the top themes that he's betting on. Let's hear him out.
is that of price correction and the other is that of time correction. I think we ended the price correction last Monday at levels of 21,800 because I think the technical studies, the breadth, the sentiment, the news flow, everything came together to possibly indicate that it was a panic bottom. Thereafter, we've seen very good constructive action. I think the Nifty is up about 1,200, 1,300 points in no time. And I think we've entered a period of time correction. I think a lot of money which was on the sidelines is now at work because I think participants believe that most of the negatives are discounted. So that's the reason you are seeing this very good-looking flamboyant rally. But I would not read too much into it. I think 23,400 and 23,800 are numbers to which the Nifty can move to. And broadly over the next 2.5 months, I think we are going to stay in a sort of a range. We will not make significant we will not see significant upside or significant downside. But between now and the end of the year, I think it's going to be a stock pickers market. Well, anything that has relative strength and anything that did not make new lows last week is something which is on top of our list in terms of longs. And I think on top of that list is financial services. I mean, if you look at the Bank Nifty, today it is at levels of 52,000, which I think is an important resistance. And once this is taken out, I think it might be the first index after financial services to actually make new lifetime highs. So I remain bullish on the Bank Nifty, and I think there are immense opportunities.
Okay, all right. Well, Gautam sounded pretty optimistic earlier today. But let's focus on the MSCI May 2025 rejig, as the cutoff date for the calculation should ideally be around today, as it's typically calculated the last 10 working days of April. And since we have a couple of global holidays, well, pretty much this should be the calculation phase where we see the cutoff date somewhere today or maybe in the next few trading sessions. Well, the MSCI index review will be announced on May 14th, 2025. The changes will take effect by May 30th. Novama Alternate, they have estimated 4 inclusions and 2 exclusions. They expect the inclusions with expected flow should come up for you on the screen. Coromandel, $210 million. That's around 13 times its average traded volumes. For Paytm, around $200 million approximately. Nykaa, another big one out there, only around $175 million, but that's around 14 times its average traded volume. So that's a large amount, in terms of the total traded volume. While Adani Energy Solutions as well, around $176 million is what the inflows could possibly be. The expected inclusions, well, exclusions, they come up for you on the screen. Sona BLW as well as Thermax, and the approximate outflows could be 111 to around $162 million odd. So Coromandel in particular, because of the possible inclusion, we have seen the stock do quite well. Today as well, it's now at the high point of the day and volumes rather large. The intraday chart of Coromandel should come up for you on the screen. Big spike up is what we're seeing on that one. Gurmeet Chadha joins us on the show. Hi Gurmeet, good afternoon. Good to see you and thanks a lot for joining in. How are you feeling about the markets? You've been a perma bull on the markets, putting out all those stats on why do you think India is going to do well. But what are you all buying? Give us a couple of top ideas that you'll have. Earlier in the show, we had discussed, the auto names. HDFC Bank, that's the other one that suddenly found its form. It didn't participate when the markets were going zooming up, but now it's been the place to hide. Your view?
So Nigel, one learning in last 20 years in the market is that, only when there is a lot of gloom is when you have bargains on the table. And every pullback is led by a very different sector always. So in 22, 23, nobody actually gave a chance to PSUs or defense names to lead the rally, because the last 5-year, 10-year returns were quite sad. Same has been the case with banks. Look at HDFC Bank, the last 4-year returns probably FD and now after appreciation of stock. So had you put money in a HDFC 4 years back and now stock returns would be identical. So was the case with Kotak. So was the case with ICICI, also consolidated for almost a year and a half. So I think with RBI pivoting, not in terms of rate cut, also in terms of the overall stance, one is officially having, accommodative stance. Second is ensuring that the credit flow in the economy goes up, the capital flow in the economy is more free. So look at, they have reversed the restriction on MFI and NBFCs in terms of weights. They have reprioritized, restructured the PSL lending, and they are ensuring through OMOs that liquidity would be 1% surplus of the total deposits. So that's very clear guidance. And with now wholesale inflation coming low, probably there is more rate cuts to follow. So that's a sweet spot. Entire Bank Nifty is still 13, 14 times earnings, below 2 times price to book. makes it a reasonable case. Domestic consumption names, I think there's a very early sign of rural consumption coming back. And I think that's very good news with monsoon surplus, better harvest expected. I've been taking some channel checks and feedbacks. So two-wheelers, basic food-based NBFCs should possibly start doing better, because that's another pocket which has been very subdued. And NBFCs. Look at Bajaj Finance. Nobody is very willing to touch it at $6,000, right? So I think the importance here is that look at sectors which are under-owned right now. Valuations are reasonable. Earnings can, positively help, and that's the place to be in, right?
All right, we take that point. Rural is something that you're speaking about in terms of showing signs of recovery. Gurmeet, we're seeing an up move on Dabur that we spoke about, but also keep an eye on a couple of these urban consumption names, especially, in the alcohol space. We have United Spirits, which is continuously doing well. Pull up United Breweries. That stock is just less than 10% away from a fresh high. It's, been a big mover. Summer typically good for them. More importantly, the Telangana issues that they have been sorted for the company as well. They've gotten a price hike, and at the same time, the fourth quarter will be a strong one for them itself. We're also seeing some traction come by in a couple of these travel names. So pull up yatra.com. That's the one which is up around 6%. So urban discretionary, rural names, and some of the consumption names picking some pace as well. As we speak, we also welcome along with Gurmeet, Prashant on the show. Prashant, I believe you had run out for some meeting, but what a meeting that would have been. 500 points on the Nifty in your absence, nearly 1,400 points on the Nifty Bank.
I want to meet a couple of lawyers, Mangalam. So they were chillaxed. They were relaxed.
All well, man.
No, not for me. But this is a good-looking screen, isn't it? 500 points nearly, and 23,320. So actually, just look at that chart. We gapped up, and that gap up is sustaining, almost plateauing out at this 500 point plus 500 point kind of gain at this stage. Gurmeet, did you? By the way, I remember you talking about specific auto names maybe a couple of interactions back. You want to name some names which are looking particularly interesting?
So Prashant, I think one reason for auto relatively underperforming was this tariff thing. And, we have a lot of clients who are into forgings and tooling and applications in terms of the wealth part of our business. And some of them are both listed and unlisted space. So our interaction with them suggests that India is not uniquely disadvantaged because it's all, it's for everyone. And some of the Asian peers, it's higher. But the supply chains are readjusting. So it will take a little more time, and the global demand, especially Europe, has been very, very soft. So companies with a lot of Europe exposure, overseas exposure, are the ones where probably the earnings could be soft. Companies where the exposure is less, so for example, domestic on two-wheeler front, I think TVS remains one of our better picks. In auto, I think Uno Minda's exposure is around 20% to US and other markets. A lot of it is domestic. Two-wheeler and four-wheeler mix is also 60-40. Continuously adding new facilities there. So stocks obviously today auto entire pack is doing well, but it will take a little time. What is probably going to do better is the tractor makers like M&M and some of the value chain there, and more, as I said, I was telling Mangalam, on the rural consumption side, some of the food-based FMCGs, some of the other larger, some of the chemical names. That's again one sector, agrochemical, completely under-owned. So we are looking at pockets under-owned, valuations being low. Some uptick can lead to a positive surprise, and that could probably help us. So margin of safety is extremely important as we enter the earnings season.
All right, and just before we take a break and take your leave, what on the property space, because we have all these real estate stocks, wherever they are, North or Bangalore, Mumbai, all of them buzzing around. You spoke about earlier in the conversation about RBI, not only cutting the rates but changing the stance to accommodative as well. Usually rate sensitives bounce back. The Realty index is up around 5% right now, but look at individual stocks. We have macro tech developers up around 7.5%. DLF itself has seen a big traction, up around 6%. Prestige Estates. So this is basically covering Mumbai, Delhi, as well as Bangalore. So we have Prestige Estates, which is up around 6% too. Oberoi Realty, another one which is up 5%. So the real estate space is abuzz. Do you think there are opportunities here even after the up move that we've seen?
I have my doubts, Mangalam. Selectively, maybe in few pockets, yes, because what we are seeing is that most of the launches were in the mid-premium and higher luxury segment. And because of the rub-off on equity and a bit of a larger slowdown, we are seeing the second and third checks aren't coming as freely, even for some of the larger names, including DLF. So there's a bit of a rub-off with, you can call it a negative wealth effect. And a lot of these investors, they were investors, they were not really end consumers. So for example, NCR, the launches were upwards of 8 crores. Places like Noida had launches starting at 6 crores, 8 crores. So I think there could be a little bit subduedness on account of that, but I'm bullish on home finance as a space. I think that's one pocket. So whether those are NBFCs like Home First or partially playing it through some of the banks or PNB Housing, I think to me that's a better play. And home improvement again is very underowned because of last 3 years underperformance in tiles, paints, etc. So we are looking at more under ownership and something which is completely out of favor where earnings can be slightly better.
I don't know if there's any news flow in IndusInd Bank, but everything gapped up today. IndusInd Bank did not gap up. IndusInd Bank opened at about 705, and the previous close was 10 rupees below. So about 1% higher, and now it's up 6.5%. So 45 rupees on IndusInd Bank, and bulk of that move has happened through the course of the day. So the highest today has been made at about 740 odd rupees at about 11:30ish or so, and we're trading not very far away from it. So that's another big one. Gurmeet, thank you very much for joining us. Good speaking with you, and it's always a pleasure. We'll take a break. Aditya Sood from Intred Asset Management on the other side. A more market conversation in just a bit.
Go back to 1989, which is when you actually started your project, your passion, which was how do you take Priya and make it a modern cinema-going experience for the Indian consumer. Same time as the iconic Amir Khan movie Qayamat Se Qayamat Tak, which was set to capture the imagination of the Indian moviegoer. Was Papa Kehte Hain the anthem playing in your head at that point in time?
Well, Papa Kehte to the in my case as well. But I was really never thinking of the Indian consumer or the macro economics of the business or the vast potential. Simply speaking, I just want to prove to my father that I'm not a failure.
We're starting at a new financial year. Is there a silver lining that you can spot?
Sid Field is one of the writers I read a lot. So he used to always say, in every story in life, or there's Act 1, Act 2, and Act 3.
Where are we today?
Act 1 is a setup. Act 2 is a conflict. And Act 3 is a resolution. My Act 2 has become very long.
Do you believe that there are likely to be regulatory headwinds?
Regulation should not happen at all. It is not part of an Essential Commodity Act. We don't come into that. So every time there is something that we hear from any state government, that's the only thing that saves us.
Okay, welcome back. There are some flashes at the bottom of the screen, and trade liberalization will look into bilateral sort of agreement. First part of the India-US trade agreement expected to be finalized by September, October 2025. Some stuff coming through. So removal of tariff and non-tariff barriers on both sides. So these are flashes coming in from the Commerce Ministry. Really, I mean, it's going to be about headline watching. But now, as has been said earlier as well, this is a third quarter CY25 story in terms of by the time something of this sort comes together, an agreement, a bilateral trade agreement. Aditya Sood is with us, a fund manager at Intred Asset Management. Aditya, good afternoon. Good to have you here. So, you know, it's always interesting speaking with you because you come up with ideas and you back them up with, you know, what you're feeling about specific stuff. And we've spoken about many in the past interactions. To your mind, given this entire tariff tussle which has been going on, are there any clear kind of winners, long drawn out, but maybe valuations right now are completely discounting the potential? Anything out there?
Yes, obviously, if you have such a big disruption happening in the world, it is logical to expect that, you know, once you have clarity, you know, there are going to be big winners, big trends will emerge, you know. So our view is that, you know, obviously for people like us who believe in doing value investing and embracing volatility, these are times wherein you can construct, you know, very interesting portfolios from a 3-5 year perspective. And obviously, this is one of those times wherein a reset of world order is happening. I think so. What we see today is that, you know, what does Trump 2.0 want is lower yields in the US. Obviously, that to a certain extent, you know, is very, very clear. It is amply clear because of refinancing, lower crude oil to snap the war between Russia and Ukraine. Obviously, it benefits India. And more importantly, this is the first, you know, crisis for a longest period of time. Even if you go back to long-term capital management collapse, you know, you have seen softening of the dollar, which is clearly very, very positive. And that creates, you know, enough room for the Reserve Bank to, you know, cut rates fairly aggressively. And this is what would differentiate, you know, a lot of emerging market central banks because they are in a much, much better fiscal consolidation space, you know, and that is what we believe. So the early trends which are, you know, sort of emerging based on these sort of macro change in macro that we are witnessing, what we are trying to understand is that, you know, wherever there is the gap between capability and, you know, vis-a-vis, you know, competition in China. And secondly, obviously, cost of production, you have got a real chance wherein, you know, India can compete globally. So we are just trying to see wherein, you know, globally competitive companies who have been exporters for the longest period of time, obviously, they are going to benefit immensely out of the new trends which are emerging.
All right. Hi, Aditya. Good afternoon. Good to see you in. Nigel on this side. You know, I'm looking at some of the holdings that you have, and we've spoken a lot of them in the past, you know, be it the healthcare companies like Newland, Indraplast, you know, that one we spoke about. We've spoken about Healthcare Global as well in the past. But I'm just looking at the financial space, and there's a, you know, the not talked about stock, that's Arman Financial Services, which is up more than 25% in the last 1 month or so. Want to give us a couple of tidbits on this one? Why are you all positive on it?
Sure. So one of our beliefs is that, you know, that you can buy the best companies when, you know, the sector is completely out of flavor. I think so. The most hated sector in the market today is MFI. You know, in the previous cycle, you know, closer to COVID, we took this view that, you know, Credit Access, Grameen possibly is the best managed MFI. It continues to be one of the better managed MFIs in this country. And obviously it is about, you know, cross-cycle NPA recovery experience. So if you look at Arman in particular, you know, it is a 32-year-old company. This is the first quarter wherein possibly, you know, they have reported a loss. Even if you go back to the COVID year, you know, they had managed asset quality reasonably well. If you look at their track record, it has been impeccable. 10 years back, the equity capital for this company used to be 6 crores, which is close to 10 crores today. Reserves have shot up from 37 crores to 850 crores. I think so. They are one of the better managed MFIs. It used to be a very, very Gujarat-focused MFI till 2017-18. Then they, moved out of Gujarat. Today they are present in, close to 18 odd states in the country. And we believe that Arman is one of the better ones in terms of, managing asset quality. So we are seeing, one of the themes that we are very, very focused today on is to buy companies wherein multiples have been cut, earnings growth has been cut, and promoters are buying. It is a very, very interesting combination if you are managing money in a flat or a bear market. And this is where I think so Arman completely stands out. They are having ample liquidity. They are not as levered as their MFI peers. Obviously, we have got some of the larger MFIs like Fusion or Spandana, which obviously are much more levered. But I think so Arman will clearly stand out in terms of asset quality performance. And that is what matters in this business.
All right, we take that point. You said that, it's a good time to buy good companies when they are they're facing the sectors, we're facing a tough time. I remember sometime in the past we've had a conversation where you were positive on IT stocks, citing valuations being comfortable. Almost 6-7 months down the line, we've only seen further destruction in those valuations and the market cap, increasing uncertainty on account of what's taking place in the globe right now as well. Do you still see this as a pocket which is attractive? Are there signs of any turnaround right now? If yes, then what specifically are you backing in the IT space?
So I think so valuations clearly are, closer to, what we have seen. If you do a 10-year average multiple, IT companies have been battered so much that possibly they are trading, somewhere closer to that. Actually, with the top 5 IT companies, the real problem seems to be growth, to our mind. Dollar revenue growth trajectory of 2.5% to 3%. That sector got massively re-rated post-COVID, in the hope of, obviously IT spends picking up. We are seeing the reverse happening at this point in time, at this juncture, wherein, people are too much concerned about IT companies not doing well. Obviously, historically, IT has been a defensive sector. Today, I think so there are two things which are happening. One is disruption on account of, AI, which is happening all through the world, basically, and that is impacting the IT companies. But we like mid-cap IT as a space. To be very, very specific, we have favored product companies here like Intellect Design Arena or Oracle that we have held in the past. So we have created within the IT basket, we like mid-cap IT. Within mid-cap IT, we like companies which are more focused on the product side, because we believe that there is going to be 1 or 2 IT product companies, which will make it very, very big over the next decade or so. Services was a thing of the past. So we are very, very positive on the prospects of Intellect, for example, because we believe that you have a real champion in the making if you purely focus on capability. Obviously, they have been not in a position to crack US till now, but we do believe that this is going to be a very, very critical year for them. For this quarter particularly, I think so they would have the highest growth quarter, possibly, margins are going to also improve. And specifically to Intellect, I think so the balance sheet is improving because they got out of the GEM contract, and that was putting some strain on working capital as well.
All right, Aditya, we'll leave it there. Thank you very much for your time. Good speaking with you. And it's always a good conversation. Well, time for our segment, D Street Chatter. Nimish will get us all the intel from the market and people that he's been speaking with. Nimish, what are you picking up?
Hi, Prashant. So good day for the markets. Is just holding on to the early morning gap up, and all the indices are up 2%. The good part is today's rally is led by the financial. So the bank Nifty is up to more than 2.5%, but there is a lot of buzz or a lot of flows as well into large cap bank names. So that's clearly the sector of the day. And there is a bit of tailwind as well, right? I mean, there is rate cut, there is easy liquidity, and also the fact that HDFC Bank and a couple of other banks have gone ahead and cut the deposit rate. So that's the reason why you've seen a bit of momentum back in the financial stocks today. From a flow perspective, again, it's a mixed day, not very large buying or very large selling. It's little biased towards buy flows. And within that, the real estate stocks and some banks, some autos are well bid. So that's one sector which is getting well bid by the institutions today. 23,300 is the level to watch as a near-term resistance. Beyond that, I guess the next level to watch on the upside will be 23,800 on a technical basis. So that's the level to watch. But clearly, the momentum seems to be with the bulls now, and leadership is back with the financial stocks.
Right, and individual stocks, what is it that you're picking up, Nimesh?
Well, Mangalam, there is a lot of buzz in the market today, and that generally happens when there is a lot of momentum in broader market names. The first stock on my list today is 361 Wealth, which is erstwhile IFL Wealth. That's been buzzing in trade. The volumes on the higher side. Looks like the HN interest is back. And also there is a strong buzz that maybe you'll hear a corporate development very soon, a potential stake sale to a global wealth company. That's the buzz as far as 360 Wealth is concerned. So that's the first stock. The second stock is IndusInd Bank. Out of the blue, that stock is buzzing in trade. The volumes are on the higher side. I understand some HNIs are again actively buying into IndusInd Bank at these levels. But also for IndusInd Bank, the very near-term trigger would be the auditor's report. That is potentially likely to come this week. So that's something to track there. The third stock is Samudra Motherson. Sud spoke about the tariff impact, and it's been buzzing with the auto names. But within the auto stocks, Samudra stands out in terms of very high delivery-based buying. And also there was a Morgan Stanley tactical buy today, so that's helping Motherson Sumi today. And the last stock is JSW Infra. Well, the stock is up today, but I understand there is delivery-based selling happening for the last couple of days, and that stands for today as well. So while the stock is up, there is this upside has been used by some larger institutions to sell into this rally in JSW Infra.
Okay, all right, Nimesh, and congratulations. You gave us a heads up about IDFC first as well as Adani. Both of them were looking to raise some money, and that announcement has come. They have the board meeting that's scheduled in the next few days. So good on you, Nimesh. Another one to the kitty.
Nigel, if I can just, this 361, the one that you highlighted, Nimesh, stake sale, right? What you're picking up? I mean,
that's the buzz that maybe a large global MNC,
a strategic one, a financial one,
a strategic one, an MNC, a global MNC player is likely to buy a reasonably, I wouldn't say substantial because that would trigger an open offer, but a sizable stake is what I understand that a global wealth company is likely to buy into 361.
Oh, wow. We've been hearing for a while global wealth companies wanting a foothold in India. I mean, they have been operating, but of course, they've been small. I mean, it's the local guys who've really done very well. The cities, the UBSs of the world have been here around for a while, but without making too much of a dent. But maybe now is the time. Strategic and a global MNC wealth player is what Nimesh is pointing out. That's 361. Thanks very much, Nimesh, for that. At the bottom of the screen, news that the IMD forecast is coming through. I think we got the SkyMet forecast earlier for a normal monsoon.
Yes.
And I think now this is, of course, the official one. They're forecasting a above normal monsoon for 2025.
And, the minute they said that, just look at some of these rural-facing companies as well. Most notably, we were talking about how Hero MotoCorp has been doing well. You have, Bajaj Auto, which has been spiking as well from a two-wheeler standpoint. Dabur had been outperforming all through today's trading session, and now we understand why. So this is a positive out here. Alongside that, as we speak, we have, Britannia, which has moved higher as well. It will be very interesting to see how names like HUL as well as, Imami take this, because from a percentage standpoint, around 35 to 40% of HUL's revenue does come in from rural India. But on an absolute number, HUL is the biggest player in rural India itself. Imami and Dabur, both of them, get about 50-55% of their revenues from rural India. Rural has shown signs of gradual improvement. It is only urban which is under a wee bit of pressure. Whether that improves or not is something we'll track in this quarter's results. But the fact that in this year itself, there is an above normal monsoon prediction after a normal monsoon that took place last year as well, 2 consecutive years, should do extremely well for rural demand. And we're seeing some of these staples pick up. Britannia has moved higher. Dabur has moved higher as well. We take a short break, come back, get you more on the markets after this break, tell you what you could buy today or sell tomorrow, calls from Mitesh coming back, and we also get you more market opinion after this short break. Well, we asked Mitesh for some of his stock picks. He did refer to Poonawalla Finance. That's the one which has now moved to the high point of trade. An order win coming in for, Ircon has also taken that stock higher. But we have Irida, which has moved higher alongside that. Intellect Design Arena, which, Aditya spoke about too, is another stock which is higher in mid-teens. Container Corp, despite missing its full-year volume guidance and after having underperformed a bit, is now coming back on people's radars. That stock has moved to the high point of trade as well. We promised you that we'll get you some interesting insights coming in on the markets. Manish Chokhani is who we spoke with this morning. Prashant spoke with him. He did touch upon a range of subjects, including Trump's tariffs, the global financial markets, gold prices, but more importantly, the state of the Indian market. Let's hear him out.
Decades of US benevolence, looking after the whole world and therefore suffering the problems of the world, paying for other people's wars, becoming a home market for others with probably among the lowest tariffs in the world. And then over the last 15 years, they printed money like crazy to come out of whatever crisis they had. Their only weapon was printing the dollar. What that's resulted in is a completely warped current account, a completely warped fiscal deficit, and a decline of really American, power in the world, in military terms and so on as well. And there's been this debate for 10 years now that is the US dollar about to lose its supremacy? And everyone's been kind of pegging away at the margin to see what the alternatives can be. So what he's coming to do, I think objectively someone needed to do it. And it's high time someone got after what they're trying to do to fix the fisc, solve the debt problem, get after current account and so on. And it's very clear China and US are now the new adversaries. And the world may be heading into a all-out war at some point. Now, what form and shape this takes, it's not like the old days where you send tanks and millions of people into battle, but maybe this is the new form of warfare to keep the other guy suppressed and down. And the US has actually led this benevolence towards China after they brought them into the WTO and basically just abdicated their entire manufacturing prowess to them. And it's to China's credit that they've leapfrogged, taken the opportunity and become really the most dominant manufacturing as well as technology power in the world. I would say already equal, if not ahead of US already. So it's high time someone did this. From an India perspective, India was completely sidelined in this whole global chessboard. We were not in the UN Security Council. We were not ever allowed to get into WTO. Even countries around us with the chessboard which was played, which should have been a home market for us in Pakistan, Bangladesh, Nepal, Sri Lanka, were all gone. And geopolitically, we were on a back foot. We didn't have really depth in our markets. And even exporters from Bangladesh, Pakistan were doing better than, say, Indian textile companies because the rules of the game were laid out in a manner to keep kind of India held back. So in a sense, what is going on, you're going to end up, I hope, on the right side of this new drawing of the chessboard. And Secretary Bessent has already said that the first 4 deals we sign are with allies. And he used the word, we didn't, which was UK, Japan, Korea, and India. I was very intrigued to hear that because they've always said we want to bring things onshore. We want to bring things near shore, which is Mexico and others. And then we want people which are friendshore. And with India already being the GCC and the IT hub for the US, it already is like a friend shoring of that in a sense for them. So in that context, the way they're laying out this new chessboard, I'm hopeful it plays out in a way which plays to India's advantage. Look, the US has 30% holding of treasuries by foreign governments. And with unfortunately the way they have gone and kind of rubbed all governments of the world the wrong way, do you think 30% of all the refinancing which is coming up over the next 12, 15 months is going to be attractive to foreigners to come in? At 4.5%, maybe you'll be tempted, but then you'll think, what if this guy confiscates my holding of treasuries? Because they've done that to other countries, which is why you've seen not just the bond yields here, but the flight of capital away this time. Number one has been gold, but it's also gone to euro. The Swiss franc is 1.2 to the dollar or thereabouts, which the Swiss central bank, I remember, was trying to hold it within parity for the longest time. The euro, which is actually, we used to call them the sick man. And Larry Summers had this thing of Europe being the museum of the world. The euro is strengthening because that capital is going back because they've clearly rubbed the Europeans also the wrong way. So I don't see an alternative for the US government, whenever this refinancing now starts coming up, to go back to anything other than printing. And that's the reason for what you're seeing is happening to gold, and why we think there is endemic inflation in hard assets. So when we talk about markets, the normal trend has been US weakens, money goes to emerging markets and hard assets. What Trump is doing is only accelerating a lot of these trends, which he also does want a slightly more competitive dollar. But if you get this rise in gold, silver, uranium, copper, whatever at one end, and real assets like factories and real estate, it's a decadal move. It's not a 2-month, 3-month kind of move. And I think you'll see substantially higher gold and silver prices.
All right, with that, we'll take a short break. On the other side, more market talk lined up for you.
Welcome back. It's Tuesday, so we get Jay Bal of CashSecures.com who joins us on the show. Hi, Jay. How are you feeling today? The markets are bullish, but are you feeling the same? We are holding around this 23,350 odd mark. I think the crucial level you're looking at is around 23,800. Tell us your reading with regard to that level.
That's right, Nigel. See, as I spoken last week, the damage to the market has already been done by Reliance Metals Index, autos, and one more sector. I don't recall exactly, but the markets that went below the March low, that's the auto index. Yeah, so auto index which went below the March lows, they've already saying this move, even if it were to cross 23,800 on the Nifty, this is likely to be a corrective move. I'm waiting for the markets to once again turn lower and signal that it's starting the next leg down. But from a slightly higher time frame, like I pointed out last week, I want the next low to be higher than 21,608 for me to turn outright bullish on the medium term. So the pattern looks like possibly this is a bull trap, but there is no tradable setup here. So stay on the sidelines. And the more important thing is I want to see HDFC Bank clock fresh all-time high. If it does that, that will be completing a major top from the pandemic low. So I want HDFC Bank to cross 1880 and then see a reversal. So that this will probably put the banking index to resist 52,600 to 59,800 in that range. So, watching HDFC Bank like a hawk, I think it's completing a very important move. I had put out a note in December and even called this a short-term short call in December. It came to 1620 and change. I was anticipating 1580, and it's now coming up to one of the possible opportunities. So let's HDFC Bank clock fresh record highs. If it does that, I think we are in for a major turn.
All right, we saw 1876.8 as today's high on HDFC Bank. Your target or the level that you're looking at is 1880. We'll watch out for that. You're calling this a bull trap. You also call it not tradable. But if one had to, play this via individual stocks, what would be the longs and what would be the shorts that you would recommend at current levels?
Yeah, see, capital goods is something very interesting, and from the July low, it's the one sector I'm unable to pinpoint as a very clear downtrend. So capital and chemical sector I pointed out a few times, and SRF being the best within that space. So these two are, we can prospect bullish opportunities within the space. But I want capital goods to, the BSE Capital Goods Index to not print 58,662, even on an intraday basis, and then cross 63,812. If it does that, I think it's presenting a very good bullish opportunity for the bulls, but still some more minor fluctuations in the short term remains incomplete.
Got that. By the way, any thoughts on Jai, hi, afternoon, gold prices? I mean, I know you've got, and of course, run us through some of the other stuff that you have views on oil, Brent, for example, copper. I think big moves since the last time we spoke.
Yeah, that's right. See, gold, the froth is building up over there, and as long as gold can hold 2970 on futures, I think it's okay. It still can be a trailing stop for people who are long, but sentiment is hugely one-sided in gold, and I'm anticipating once the decline starts, I think gold will surprise a lot of people to the downside. And when it comes to copper, like we didn't have enough time last week. Copper generally has a tendency to clock a significant top after the equity markets clock the top. It did like that in 2000, 2008, even in 2011, the secondary top, and it's probably doing right now in 2025. So copper is, as I pointed out last week, copper gets its doctor degree because of its ability to spot its bottom early, but not the top. It's generally late at the top. And when it comes to the NYMEX crude, or even Brent crude, I'm anticipating volatility to come through. I'm anticipating Brent to bounce to somewhere close to 70s and then come back to one more lower low. And when it comes to the US 10-year yields, I think we are in for a significant hardening of the yields. I'm anticipating 480 bips to get crossed. So probably that can cause some problems to the equity markets.
That won't be good news at all. Actually, Trump's plan was going perfect until the yields were cooling off. The problem was once they jumped, then that entire on markets forward. For the time being, let's do a quick recap. Good trading session. Second day running, the Nifty goes home at the high point of the day. What really did well in today's trading session was the Nifty Bank was up close to around 2.8% or thereabouts. The midcap index as well was up close to around 3%. The advanced decline ratio firmly in favor of the number of stocks that are advancing. You like to look at that screen, 2,300 stocks advancing. The final tick at the high point of the day, Coromandel, that's a stock that we pointed out. It could be a potential MSCI inclusion once the rejig announcement comes in the middle of May. That went home with a gain of close to around 7.5%. Sun TV as well up 4.5%. Abbott up close to around 5%. Poonawalla Finance up close to around 4.5%. On the downside, Atul Limited was underperforming, down close to around 2%. And Max Health as well was down close to around 1%.